All right, folks, LA here. This is the weekly report. Went out on the 20th for the 19th last week. We saw the markets break out to the top side. NDX 100 was leading the way. Still red on the Russell of all things. Bitcoin continues to sell off, and you can see the rest of the numbers here. If you look a little bit deeper, rising rates have boosted the dollar and they boosted interest rates. And the one thing, if you look at it from a year-to-date perspective, the one thing that really stands out here is that the Russell is still negative, despite, green everywhere else. Dollar's pushing higher, which of course is hurting all these other things. So it's the same sort of thing that we've seen before. Small caps, precious metals getting hurt with the dollar pushing higher. The big winners of the year so far have been semiconductors and technology, and that's really, if you look at it just straight away, that's really all you need to look at, because they're driving the action. And of course, with them driving the action, that means that technology, mega caps, they're driving it. In particular, Nvidia, which is up 20% in what do we got? Probably 12 days of trading so far, or 13 days. The big news, of course, this week was the fact that the NDX now has some members that have joined it, the S&P 500 and the NASDAQ, now making new highs. So all-time highs, it happens to be on the S&P 500 on this breakout. The key now is going to be follow through, right? This thing has to follow through. You've got these huge ABCD structures that you can see down here, that if in fact that they do fire and you fulfill, we're going to be pushing up around 5,000 when that happens. When I say follow through, the reason I say it is you don't want this breakout, and this is on a weekly. On a daily, there was this range that was there for a few weeks. You don't want this thing to curl right back over, right? Because then that just tells you all you did was you get a burst up because of short covering, and then the sellers come right back in. So you want to see the follow through. And that'll be true over here on the NASDAQ as well. This is new highs for the move. It's not all-time highs yet. But again, you've got ABCD structures that take this a long way up. Despite rising rates, we saw this kind of action. How can that happen? So, rates were in a range. When they're in a range, they can continue. Yeah, rates have been going up, but they were in a big move down to start with. And so, rates, as long as they stay in this range, probably from here to here, they're going to be fine. I mean, the market can move up with a range like that. You get used to it. Popping back up here to the charts, here's the index 100. It broke out. This is on a monthly now. It broke out last month, and it's starting to get that follow through, and that's what you want to see. And in all of these, you can see large ABCD structures to the upside. Where do we not see it? Well, we don't see it in small caps, right? Retest regen, the bullish retest regen that was here, did not succeed. In other words, it didn't hold price. It actually closed below it, but you did get a hammer reversal. So my guess is you're going to see a little spike up to take this back up into this higher range up here, but it's probably going to stagnate. And so anyway, that's the Russell, the small caps. I would expect to bounce out of it next week. You don't have any active ABCDs here. And the strangest thing, if you look at it, is if you got all-time highs on the NDX and the S&P 500, yet small caps are basically in a bear market. They're more than 20% down from their highs. Eventually, maybe they'll break out and they'll play catch-up. And this is on the monthly, and of course, this would be a huge breakout if they can get over this hump. They've come up here 3 times. Potentially the fourth one they'll get out and they'll run it on up to the next one. But that may be further down the road. There was dollar strength last week, but the euro, of course, is a major factor. And when I look at the euro on a monthly, this looks pretty bullish. Comes up here and sits like a cup and handle kind of situation. It's consolidating. There's a big retest regen that is doing off of that COVID lows, or that big COVID, wide price anchor bar. There's a swing point high right here. My take is that this is eventually going to break out and it's going to run up to this area in the full retest regen. And that's going to press down on the dollar when it happens. If we turn from the indexes to sectors, and here's the IBB, you can see how it's set up potentially to break out. I've posted some numbers in here that you can see. Here's the XLF, 10% left on its move. XLK, of course, it's got another 10 or 15% projections if you look at the ABCD structures. Here's the XLV. That looks like it can run another, actually that was supposed to be 16% to 16.5%. And despite its struggles in the XLY with Tesla, even the XLY has broken out. Fundamental factors, last week, if you look at what happened, the earnings really aren't moving the needle. It's just kind of blasé, some of them up, some of them down, most of them just kind of sideways, not much reaction. Retail sales came in a lot stronger than expected at 0.6, and the European CPI came in at 2.9, and that suggests that there's going to be a change in the trend back up. If so, that's going to make it stronger against the dollar, which kind of feeds into that chart we were looking at just a second ago. This week, ECB policy statement. You've got them, you got the Bank of Japan, I believe Canada actually reports as well. Core PCE prices, these are all the things that look like they potentially could move stuff. I think the earnings might be interesting with Tesla, Netflix, and Intel. There's quite a few others as well. And then we got the quiet period in front of the Fed meeting the following week. Bottom line here is, got the breakouts this week. It appears that the consolidation is over. We'll have to see if we get that follow through. Many of those daily MTTFs flip back to bullish, but there's still some that are concerning here, and those are mostly in the sectors. And, they're extended basically. And so when you get extensions, usually going to change. If you look at these are all bullish, except for one. And that says that, hey, they ain't got no place to go but down. And so that is continuing to exert pressure on the market. Elsewhere, you reset on the NDX, you reset on the S&P. That can take them out to March. All along, I've been saying, the money's going to be made probably in the first quarter of the year. And after that, it's going to get harder. I suspect the March period is going to be the tough period. And so you want to make as much as you can before you get there. Another issue is going to be the weighted trends, or at least a potential issue. You can see the participation trends being bullish going down. And so as we shoot down, but yet price is now starting to break out. That's typically not what you see. I mean, if you look back over here at other periods and you say, well, what happened there? Well, look at this one when it came down. What did it do? It came down in price. Look at this one here when it came down. What did it do? Well, it came down in price. And so, that's typically what you see. When you see a decline, you see a decline in price. So I would expect that this breakout is going to have a tough time extending. And that's what we really need to keep an eye on. The most interesting tidbit this week, I was thinking about drones, doing some more reading on drones. And one of the thoughts was, how are they going to keep these things from crashing and burning? Because right now there's really no regulations that keep that from happening, right? There's some general stuff like, if you're flying one of these things, you got to give way and do not interfere with other aircraft. But I mean, that's kind of manual. I think what's going to have to happen is you're going to get some sort of a standard get adopted, and it's going to be something like what MIT's got going on with this multi-agent trajectory planning system. It basically says, in an automated fashion, they create this optimal collision-free trajectories and they continuously check for potential collisions. I would expect that something like this is what's going to happen eventually, and that's what's going to be out there that keeps these drones from running into each other. You're going to have something automated to do that. And so it's not there yet, but I would expect that's what we're going to see develop over the next couple of years. Trading plan, we continue to get some good gains out of this, up to 4% now on the year, which is pretty good 3 weeks in. We had to take a stop here on CVX on the oil trade. Never got anything out of those oil trades. Microsoft did well. We flipped that, probably should have held it. We've got the PST position. We took half of that off, or actually a little bit more than half that second position we put on. And we added in some more longs on this week. As a matter of fact, 4 of them. So the ideal here was that, the market was looking more and more bullish, and it looked like we needed to get more exposure on, and that's what we did. So we got longer in the market. We're 86% invested, 6 of us on those long rates, 80% in stocks. We're really basically in 3 areas: uranium, precious metals, and technology. What we're going to do is we're going to want to deploy the rest of that at some point. I don't think that's going to happen immediately, but it could. And finally, stopping here with the projections. Last week they pushed almost to the projections that we had. Got to 48.42. We had it at 48. This week, it's kind of hard to guess where this is going to be. We tried to do some projections there. It looks like about 49.5 almost. And the lows probably right there with this big anchor bar at the top. That's it for this week. Have a great one. Stay safe, and I'll see you next time.